Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking oil and oil prices. Just kind of stubbornly treading water here as of late. Price action came. We were in a bullish formation. We had a big outside day move higher on Tuesday. And lo and behold, the market went up early this morning. Now, we got some data that showed inventories were much higher than expected. We were actually anticipating a decline, much higher than expected, bringing all those gains, wiping them off the table, and getting us back trading around 50 bucks a barrel, maybe slightly above. But essentially what it's done here is it hasn't taken away the bullish trend. It's sort of taken away the surprise bullish trend. And I think they were looking for an extension as price action has been rather muted, and we haven't seen that mid-50s, pushing $60 a barrel here for quite some time. And I think that's kind of where OPEC had anticipated we would be if you go back 4 months when they announced they were going to make these rate cuts, production cuts, excuse me. And I think looking back here, volatility is telling you something about oil. I know oil volatility has been in decline in 2017. It's right today is no different, resting right at the year-to-date lows or just above. And I think that's kind of telling that there isn't this fear, this anticipation of a big breakout move. When we look at oil, I think we tend to look at the downside as the real risk. And I think that if oil prices get below a certain level, we'll call it $45 a barrel, then you're going to start to see sort of an exaggerated push lower. Moves to the upside come on surprises, they come on fear, and they come on some kind of geopolitical disruption, which could happen at any moment. And that's sort of what gets us to push higher. Likewise, what we saw from the Middle East back in November when they announced their production cuts, they anticipated that it would take away from the inventories and the supply and get us back up to a more sustainable higher level, which hasn't happened. So that takes us to point number 3 here is, what's next for oil and what's going to get oil prices to that level? And we've already heard whispers of possible future production cuts, maybe extensions out 6 months to a year. And I think the oil market right now wants confirmation on that, because if we did think that OPEC or the Middle East was going to continue to cut prices, I think we'd certainly see oil back up in the mid-50s. But I think we're going to see, based on what we're seeing, maybe with a slight uptick in the economic data here in the States, maybe with a slight uptick in demand, we're going to start to see oil go back down towards, the mid-40s. And the demand component needs to come in strong, I think, in order to offset any kind of supply, which we haven't seen. And I think right now, oil hovering around 50, likely to the downside of 50, is more likely than the opposite, unless we get some kind of announcement which boosts us higher. Lower volatility keeps us in a range. Higher volatility should anticipate lower pricing. And then the what if is if we go higher. And right now the what if seems to be very muted, at least until we get through that May OPEC meeting. This has been Todd Colvin coming to you from the floor of the CME Group.